Hi guys, let's start our next topic for marathon revision, which is residential status. This is also one of the smallest topics, but yet important. Now, I will start with one of the beautiful examples. Let's say, for example, you know Virat Kohli, right? Virat Kohli is a Indian cricketer who is residing in India. Generally, he will be in India only. Let's say, for example, he has a house in Australia. He owns a house in Australia and he has rented that house to some Australian person outside. Now, Indian person, Mr. Virat Kohli, is owning a house in Australia and he has given it on rent to someone outside India. So, where he will be receiving the rent? Outside India, that is in Australia, he will receive. But who is receiving? Indian person. Now, see, where is the controversy arising here? Indian government will tell boss, you are an Indian earning income, then you have to pay tax to me because you are Indian. So I have the right to tax you. Whereas the Australian government will tell what? Boss, you have earned the rental income from Australia. Your house is located in Australia. So whatever rent you have earned from Australia, you have to pay tax to me. Now, what is happening here? Both the countries are trying to tax on the same income. So, double taxation is happening. But we will keep the double taxation thing aside. But have a close look at this. There are two rules of taxation. One says residence rule. The other is says the source rule. Residence rule means what? The government, the Indian government has the right on this Virat Kohli to tax him because he is a resident of India, whereas Australian government is trying to tax on the rental income because the source of the income is in Australia. So there are two rules of taxation. One is residence rule. Residence rule is nothing but whoever is a resident of my country, I have a right to tax that person. Source rule says was if your source of income is from my country, I have the right to tax. So there are basically two. There are basically two rules of taxation. One is the source rule and residence rule. Is it clear? Next, under residence rule, the residential status of person is determined to find out the taxable income. Let's get into the residence rule and properly let's have a look how a residential status of a person is determined. So, but before even getting into how to determine the residential status, first let's explain why do even I need to find out the residential status. Was very simple. If you are a resident of India, if you are a resident person of India, your global income, wherever you earn income, be it Australia, be it America, Canada, anywhere you earn income, you have to pay tax in India because you are resident of India. Are you getting it? So unless you don't know whether you are a resident or not, how will you know on what income you have to pay tax? So if I am a resident of India, wherever in the world, if I earn income, I have to pay tax on that. If I am a non-resident, only that income which the source is in India, I have to pay tax on. Let's say, for example, if I am a non-resident, only that income which I will earn in India, I have to pay tax. If I'm earning outside the India any income, I need not pay tax because I'm a non-resident. So there is the necessity to find out whether a person is a resident or non-resident. Getting it? Next. Sir, for which persons do we need to find out this residential status? Very simple, boss. We know person includes individual, HF, AOP, BOI, LLP. For all these persons, companies, firms, everyone we have to find out residential status. Every year also we need to find. Not that if I am resident in this year, for lifelong I'll be resident. It does not happen like that. So for every year, for every person, we need to find the residential status. Now, see, let me explain you one thing. Only in the case of only in the case of individual and HUF, there are three categories of residential status. In all other persons, that is firms, LLPs, company, cooperative society, whatever, there are only two categories of residential status. I repeat, in the case of individual and HUF, there are three categories of residential status. In all other persons' case, there are only two categories. So, what are these categories? See, in the case of individual and HUF, an individual and HUF can become resident, ordinary resident. resident, not ordinary resident, and non-resident. In all other persons can either become resident or non-resident. So what is this? Please explain. See, resident, ordinary resident means generally you are resident only. Generally you are resident. Generally you are resident. Ordinary resident. Not ordinary means you are resident for this year, but you are generally not resident in India. This year you are resident only, but generally you are not a resident in India. Non-resident means you are not residing in India, but you are residing for a less than the limits prescribed. Now, let's try to understand this. So this here I have given you a point. Only individuals and HF can become resident, not ordinary. But in the case of all other persons, you will only see either resident or not resident. Are you getting it? Now, how to find out residential status, sir? See, boss, there are basically two kind of conditions. One, basic conditions. Two, additional conditions. Basic conditions, there are two conditions. Condition 1, condition 2. Additional condition also you will find two conditions. Condition 1, condition 2. You can see here, basic condition there are two conditions. Additional conditions also there are two conditions. But now, whatever I am going to discuss right now is in the case of individual. Now, what I am explaining is the residential status of individual, how to find out. So, in the case of individual, we need to find out residential status. In that, we have totally two kind of conditions. One is one is the basic condition, the other is additional condition. Under basic conditions, we have two conditions. Under additional condition, we have two conditions. In basic condition, any one condition if you satisfy, you become resident. Once you become resident, once you check the basic conditions, then you need to go to the additional conditions and check how many conditions that person is satisfying. If the additional conditions, both the additional conditions are satisfied, then the person will become resident and ordinary resident. Whereas if one of the basic condition is satisfied, but any one condition only satisfied in the additional condition, or none of the additional conditions are satisfied, the person will become resident but not ordinary resident. If in the basic conditions none of the basic conditions are satisfied, that person will become non-resident. Is it clear? So in the case of individual, there are two kinds of condition: basic conditions, additional condition. You can see here two conditions are there. If you satisfy out of these basic condition, any one, boss, even one satisfied, no need of two conditions satisfying, because here you will see I have given or, means one or two, any one satisfied, you will become resident. So let's say, for example, you did not satisfy any of these two conditions. In the basic condition, you did not satisfy both of the conditions, or not even one condition satisfied, you will become straight away non-resident. So once you check this basic condition, you have to move to the additional conditions, and you have to check whether both the additional conditions are satisfied or not. You can see here and is written, means in additional conditions you need to satisfy both the conditions. If you satisfy any one basic condition, both the additional condition, you become resident and ordinary resident. You satisfied any one basic condition but did not satisfy both the additional condition, you become resident but not ordinary resident. You did not satisfy even any one condition in basic condition, you straight away become a non-resident. Now, what are these conditions? See, in basic condition, the first condition given is you have to stay in the current previous year in which you earned income more than 182 days. You have to stay in India more than 182 days during the previous year. Second basic condition says in the current previous year 60 days or more you have resided, and in the last 4 previous years you stayed collectively 365 days or more. What are the additional conditions, sir? In additional conditions, if you have resided, means you are a resident in India for minimum 2 out of the 10 previous years. Out of the 10 previous years, if you are resident for minimum 2 years, in that case, this condition will be satisfied. The second additional condition which you need to satisfy is minimum 730 days out of 7 previous years. 730 days collectively, not in each year 730. So all 7 years put together, if you have stayed 730 days or more in India, then you are satisfying the second additional condition also. Whatever I have taught just now, it is summarized here. Basic condition, anyone satisfied, you will become resident. Basic condition, not even one satisfied, boss, then you straight away become a non-resident. If you once you satisfy the basic condition, then you will further check what additional condition. In additional condition, any one only satisfied, boss, you satisfied any only one condition, in that case you will become resident, not ordinary resident. Additional condition both satisfied, in that case you will become resident plus ordinary resident. Is it clear? Next, there are a few important points. Stay in India includes territorial water also, because India is not just land. Even if you are in air, even up to 12 nautical miles in water, you are considered as a being in India. Now, the stay in India need not be continuous. For few days, you may go to America for and you can come back. But the residence, the stay will be checked for a previous year from April to March. Is it clear? So, period of stay need not be continuous. Both the date of departure and date of arrival are to be considered in India. The day you board the flight, the day you landed into India, both will be considered that you are in India only. Citizenship is different from residential status. This is very important. See, citizenship is nothing but by birth I get citizenship in India. If I have born in India, I am a citizen of India. But residential status depends on how many days you have stayed in that country. I may be citizen, Indian citizen. Let's say, for example, I went to America for 1 year. For one previous year, I went to America. Did I stay for any, even not even a single day? I stayed in India, boss. For that year, I'll become non-resident. But mind you, I am Indian citizen only because I was born and brought up in India. For this previous year, I went to America. So what is happening here? Citizenship. I am an Indian citizen, but a non-resident because I did not stay in India for almost a year. Is it clear? Next, there are some special cases in which we have to little bit alter the basic conditions. Is it okay? Now, in the case of, so there are two scenarios. In the case of Indian citizen being a member of a crew of a ship which is leaving in India, I repeat, Indian citizen being a member of a ship, crew member of a ship, or an Indian citizen leaving India for the purpose of employment. Two things I covered. Next thing is Indian citizen or a person of Indian origin visiting India. Generally, he resides outside India, but he is visiting India this year, and his Indian income is less than or up to 15 lakh rupees. These three cases. Let me explain you here. Indian citizen leaving India as a crew member or ship or for employment. So, I'm an Indian citizen. I may leave India as a member of a crew of a ship, or I may be leaving India for the purpose of employment, or I'm a person of Indian origin, or I am a Indian citizen. Generally, I reside outside India. But this year, I have come to India to visit India, and my Indian income is less than or equal to 15 lakh rupees. Now, mind you, to 15 lakhs, which I am saying, this does not apply in the crew member and person leaving India for employment. This only applies for Indian citizen or person of Indian origin visiting India. Are you getting this? So, in these three cases, case number one, Indian citizen leaving India as a member of a crew of a ship. Case number two, Indian citizen leaving India for the purpose of employment. Leaving. In these two first cases, leaving. Now, third case, visiting. Indian citizen or person of Indian origin visiting India, but his income is up to 15 lakhs. Indian income. Don't include foreign income. Up to 15 lakhs. These three cases put together, you have to alter the basic condition. First condition only applies, second condition you have to just ignore. In these three cases which I just told, you have to ignore the second basic condition. What is second basic condition? 60 days in current year, 365 days in last 4 years. Condition just ignore. Only one condition applies to them. One basic condition applies to them, which is 182 days or more. So once they satisfy this 182 days or more in the current previous year, then you will check the additional conditions, then you will determine the residential status. Now, there is one more special case. Indian citizen or person of Indian origin visiting India, but his Indian income is more than 15 lakhs. You remember in the first special case, we discussed the third scenario where I told that Indian citizen or person of Indian origin visiting India less than Indian income less than 15 lakh rupees. In that case only, just that in the second special case, Indian citizen, person of Indian origin visiting India, income is more than 15 lakhs. Indian income is more than 15 lakhs. In that case, both the basic conditions are there. No, they will be applicable. Anyone he has to satisfy, but in the second basic condition, one alteration you have to do, one change you need to do. Wherever 60 is given, you see this 60 days, there you have to just strike it off and write 120 days and then apply. Means any one basic condition only he has to satisfy, either 182 days or a second condition. But in second condition, in the place of 60, you have to consider 120 days. So 120 days or more in the current previous year plus 365 days in the last four previous years he has to satisfy, or he can also satisfy the first basic condition, which is 182 days or more. There is one more tweak here. If he stays more than 120 days, more than 120 days in the current previous year, but less than 180 days, 182 days in the current previous year. So he stayed for more than 120 days, but he did not stay for more than 182 days in this current previous year. In that case, he will straight away become resident, not ordinary resident. Is it clear? Is it clear? So let me just repeat it very quickly. This is a special case. There are two special cases. Case number one, three persons are included. Two persons are leaving India. One person is coming India. Who are these two persons leaving India? Indian citizen being a crew member leaving India for in a ship. Indian citizen for purpose of employment leaving India. Third person is Indian citizen or person of Indian origin, also Indian person, Indian citizen or person of Indian origin visiting India. Visiting India, his income is Indian income is up to 15 lakh rupees. In these three cases, in the first scenario, you have to just ignore the second basic condition. In the second special case, Indian citizen or person of Indian origin visiting India having Indian income of more than 15 lakh rupees, you have to change the second basic condition. In the place of 60, you will take 120 days. Rest all remains the same. So one special attachment to this second special case, that if that person is staying for more than 120 days in India but has stayed less than 182 days in India during the previous year, he will be straight away called as resident, not ordinary resident. I hope that is clear. So that's what is given here. Indian citizen living India, crew member, everything is given here. Now, sir, who is a person of Indian origin? The person of Indian origin means he or his parents or his grandparents were born in undivided India. Now there is one rule 126, which helps you to determine the number of days of stay of a crew member. See, in the case of a crew member, generally he resides in India, but as a member of a crew, he leaves India in the ship. No. So whatever time he was out of India, in that ship out of India, he will be going. That time you have to remove from his period of stay in India, correct? So what is that time from the day he entered into continuous discharge certificate to the date of signing of a CDC, continuous discharge certificate, that will be treated as not in India. Other days he can be treated as in India. Now, there is a concept called a deemed resident. This is applicable only in the case of Indian citizen. Indian citizen. This does not apply in the case of person of Indian origin. So let's say, for example, if an Indian citizen is not liable to tax anywhere in the world, boss. In India, he is not liable to tax because he is not residing in India only. Likewise, he is not satisfying any other country's rules for taxation. Or let's say, for example, he is residing in a country, let's say for example tax haven country, where there is no tax at all. So he is not paying taxes anywhere, but he is an Indian citizen. In that case, he will be deemed that he is a resident of India and he'll be taxed. But there is one condition, that is Indian income should be more than 15 lakhs. So I repeat, if you are an Indian citizen and you are not liable to tax anywhere in the world due to any reason, but your Indian income is more than 15 lakh rupees, you may be non-resident in India, and your Indian income is more than 15 lakh rupees. In that case, you will be deemed as resident, not ordinary resident. Resident, not ordinary resident. Indian citizen having Indian sourced income more than 15 lakhs and not liable to tax in any other country due to domicile or any other similar nature, right? Only Indian citizen is taxed. A deemed resident is always a resident, not ordinary resident. I hope that is clear. Now, whatever we have discussed so far is applicable only in the case of individual, resident individual, or non-resident individual, or resident not ordinary individual. Now, what we are discussing is determining the residential status in the case of a HUF. See, in HUF, it is a bit different scenario. First, what you will do in the case of HUF is, for a HUF separately, see, HUF is a separate entity. Karta is the separate individual. Yes or no? HUF is a separate entity. Karta is an individual who is just the head of the HUF. Yes or no? So, how to determine residential status in the case of a HUF? In the case of a HUF, you have to first check where is the control and management of that HUF is taken. If the control and management of the HUF is even partially or totally within India, that will be called as a resident HUF. If the control and management of the HUF is in India, it will be called as a resident HUF. Whereas if the control and management of the HUF is totally outside India, that HUF will be called as a non-resident. But remember, initially I told you only individual and HUF, only individual and HUF, only individual and HUF can either become resident ordinary, resident not ordinary, and non-resident. Yes or no? Now, sir, how to determine whether a HUF is a resident not ordinary resident, resident ordinary resident? Yes or no? Yes. Now, if the karta satisfied both the additional conditions, if the karta satisfies both the additional conditions, then the HUF will become a resident and ordinary resident. If the karta satisfied only one additional condition or did not satisfy both the additional conditions, then the HUF will become resident but not ordinary resident. I repeat the whole scenario in the case of a HUF. If the control and management of the HUF is in India, then the HUF will become resident. Then how to check whether it is an ordinary resident or not ordinary resident? You have to check whether Karta is the staying in India or not. So if the Karta satisfied both the additional conditions, not the basic condition, additional condition, if both are satisfied, then the HUF will become resident and ordinary resident. But if the if the Karta did not satisfy even one additional condition or even one satisfied but the other did not satisfy, in that case, the HUF will become resident but not ordinary resident. If the control and management is totally outside India, then the HUF will become non-resident. I hope that is clear. Now, residential status in the case of a firm, LLP, OOP, BOI, AJP, and local authority. In all these cases, with the control and management, even if it is partial in India, that will be called as a resident. And if the control and management is outside India, it will be called as non-resident. You know, individual and HF only can be categorized as ROR, RNOR. In all other cases, it is either resident or non-resident. So, control and management wholly or partly in India, it will be considered as a resident or non-resident. So now residential status in the case of a company. In the case of company, what we check is not the control and management, kind of control and management, and it is place of effective management. It is called place of effective management. So if the place of effective management of the company is partially or totally in India, it will be called as a resident company. If the if the place of effective management of the company is totally outside India, it will be called as non-resident. Now, whatever we have seen so far, it is about the residential status based on the residence rule. Now, scope of total income. Sir, once I know whether a person is a resident or non-resident, now the next step is to know which income I have to tax in this person's hand. Yes or no? So before even getting into understanding which income we have to tax in the person's hand, we have to understand that there are two kinds of incomes. One is a Indian income, the other is a foreign income. What is a Indian income, sir? Indian income has three categories. One, income received in India, income deemed to be received in India, income accrued, arised, or deemed to accrue or arise in India. Now, any other income apart from these two will be treated as a foreign income. What is income received in India? Let's say, for example, boss, for example, there is a cricket player, Australian cricket player. There is a Australian cricket player who has a house in Australia. Australian cricket player has a house in Australia. He has given that house on rent to Sachin Tendulkar. When Sachin Tendulkar went to Australia, he stayed there. When Sachin Tendulkar went to Australia, he stayed in that house and he paid rent to Ricky Ponting. Let's say, for example, Ricky Ponting let this house to Sachin Tendulkar. Now, Sachin Tendulkar paid the rent in India only to Ricky Ponting. Now, if you closely look at this, house source of income, house rent is situated outside India, but the rent is paid by Sachin Tendulkar being in India. Then income is received in India or not? Yes or no? So that is what is called income received in India. Are you getting this? So, income received in India, any income received by a non-resident in India shall be taxable in India, even it has accrued or arisen outside India. So, accrued means what? Rent from house outside India. No, Australia. The house was situated in Australia. The rent was generated outside India, but the rent was paid from India. No, so where did this Ricky Ponding received in rental income? It was received in India, so that is why it will be taxable in India. Rental income received by Mr. Ricky from letting out a property situated in Australia to Mr. Sachin, Indian resident, shall be considered as income received in India. Receipt of income means the first time receipt only, not the then further. Let's say, for example, Ricky Ponting received this rental income from Sachin and he gave to one of his friend. Just casually, he gave it to one of his friend this income, or let's say he gave as a loan. That again will be not treated as a income in that recipient's hand. So after receiving income, if the money is sent to another person or place, it's not considered as new income in the hands of further recipient. Income deemed to received in India, deemed to be received in India. So first case what we have seen is income received in India. Now what we are seeing is deemed to be received in India. See, there are three cases here. One, employer contribution in the case of in excess of 12% in the recognized provident fund, or interest credit more than 9.5% in the on the balance which is standing in the recognized provident fund. Both will be deemed as received in India. Contribution by central government or any other employer in the national pension scheme, that will also be considered as deemed to be received in India. Amount transferred from unrecognized provident fund to recognized provident fund, to the extent it is representing the employer's contribution and interest thereon, will be treated as income deemed to be received in India. Now, deemed to accrue or arise. Please understand this. See, accrue or arise concept is actually, I mean, the terms accrue and arise are not defined in the Income Tax Act. The term accrue and arise are not defined nowhere in the Income Tax Act, but there are a lot of income tax judgments and CBDT circulars which says that accrue or arise. Sir, what is this meaning, sir? The meaning is very simple. Accrue or arise means the place where the income is generated. Let's say, for example, there is a house situated in India, and that house is let out to some person outside India, and he paid rent outside India to that non-resident. But still, where is the house in India? Where is the income, rental income generated in India? So, the place where the income is generated, that is called accrual of income or arising of income. Is it clear? The term accrue and arise are not defined in the Income Tax Act. Income is deemed to accrue or arise in the place where the income is generated. Let's say, for example, there is a non-resident. A non-resident is there who has kept some money in the form of a fixed deposit with an Indian bank. Now, what Indian bank will give interest? Yes or no? That interest income is generated where in India only, because the loan is in India. I mean, the fixed deposit is with an Indian bank. Interest is also getting generated from the India only. So that is the income is accruing or arising from India. As per CBDT, an income is said to be accrue or arise at the location where the services or activities for earning the income are performed. Let's say, for example, one beautiful example I'll give you. There is a company called Tesla company, Elon Musk. From Tesla, one employee is sent to India to perform some kind of a project work or some services it has to provide. So the non-resident employee will come to India and provide some services. Due to this, the salary, I mean, the non-resident will get salary, yes or no? Yes or no? But where the non-resident will get salary? Outside India only. Because who is the employer? Tesla. Tesla is company which is outside India, paying salary also outside India. This non-resident will be having a bank account outside India only. No. So who is paying? Non-resident is paying. Tesla company is paying to a non-resident only, and the payment is also done outside India. But why the why the salary is received? Because the non-resident has provided some services in India. So due to provision of services in India, there the non-resident is getting income. So in that case also, the income will be deemed that it is accrued out of India because the services are provided in India. So I have given you few examples for income accruing or arising. Rental income of a house owned by non-resident from a house situated in India. Salary income of non-resident for services provided in India. Interest on fixed deposits with a Indian bank. Is it clear? Now, income earned outside India is not considered just because it is shown in Indian balance sheet. It has to actually accrue or arise in India. See, there are clauses, clauses in this section 9. 911, 12, 13, 14, 15, 16, 17, 18. All these are very important, and all these talks about Indian income deemed to accrue or arise in India, or income accruing or arising in India. Is it clear? Let's look at this. 911, income deemed to accrue or arise in India. The first thing is business connection. Let's say, for example, if a non-resident has a business connection, means the non-resident has some agent or a partnership or a branch office in India which provides a help for the non-resident so that he can generate a income outside India. In that case, if any income is generated, that will be treated as a business connection, and income will be deemed as a accrued or arised in India, and that will be taxable. But there are few special cases where it will not be treated as business connection. What are these? The following shall not be treated as business connection. Though the non-resident might have earned income out of these scenarios, but still that will not be treated as business connection, and the income will not be deemed as accrued or arised in India. Business operations carried outside India. Totally business operations are carried outside India only. Nothing is done here. Only, let's say, for example, little bit of marketing was done, but no operations was done here. But they earned income. The non-resident has earned income outside India in that case. Purchase of goods in India for export. Let's say, for example, a non-resident is purchasing goods from India and exported it. Are you getting it? And the earned income outside India, then it is not treated as a business connection. Collection of news. A news, let's say, for example, BBC from USA came, collected some news in India about, let's say, for example, for regarding the Kumbh Mela. They have collected news and they have projected there only outside India. They did not project anything in India. They projected outside India, so they earned some income outside India. But the news collected from India, no. Maybe you may think that the source is in India, but that will not be treated as a business connection. No need to pay tax. That is not deemed as a income accruing or arising in India. Shooting of a cinema films. Let's say, for example, a Hollywood film wants to shoot in India. The location is very good, so they can just shoot and go out. But they come and present the film here. They earn money. That will be taxable. Just to shoot they did. That's all. Few clips they have taken here. They went there. They sold the tickets there only. They are earn income outside India, then it will not be treated as a income deemed to accrue or arise in India. Display of uncut diamonds. So, if in some jewelry exhibition the diamonds are presented, in that case, any income generated by non-resident will not be next. The next thing is salary payable by salary payable for services rendered. Just now I told you about this Tesla example where a non-resident employee is sent by a non-resident company to India to provide some services, and if this person, non-resident person, gets some salary for providing services in India, that will be treated as a deemed income deemed to accrue or arise in India. 913 salary received by an Indian citizen. If an Indian, let's have, there are a lot of Indian revenue officers, yes or no, Indian revenue service officers who are sent by Indian government to provide embassy services to Indian government. So, where they will be residing, generally they will be outside India and they will be providing services to Indian government. So, if any employee has been sent by central government from India to outside India, and in that case, if any salary is received by that person from Indian government, that will be treated as a income deemed to accrue or arise in India. But mind you one thing, if any perquisites are provided, salary is different, perquisite is different. If any perquisites are provided, those are anyway exempt in the hands of that employee. So, perquisites or allowances are exempt under section 1017, whereas a salary received from by an Indian citizen from a Indian government will be deemed as accrued from India. 914 dividends from an Indian company outside India. Let's say, for example, there is a non-resident who is holding Reliance India company shares. If any dividend is received by that non-resident, it will be taxed in India. 915 interest income received by non-resident. See, interest income. Let's say, for example, there is a non-resident who has given loan to three parties, boss. There is a non-resident given loan to three parties. Number one, either to government of India. Let's say, for example, Indian government is taking loan from a non-resident. What the Indian government will pay? Of course, the government will pay interest. Yes or no? Interest. Then the interest will become a income for that non-resident. Then he has to pay tax on that. Yes or no? Interest income received by non-resident from government. So first scenario is done. Second scenario, non-resident is giving loan to a resident. Let's say, for example, I am a resident, I am taking loan from a non-resident, then I have to pay interest to that person. That interest will become income to that person, so he has to pay tax. So what, it will become income deemed to accrue or arise in India for the non-resident? Yes or no? Interest income. But let's say, for example, I took loan from non-resident, but by taking this loan, this money, I did not do anything in India. Rather, I invested in some business outside India only, for example. So I took loan from a American person. That loan amount, I did not do anything in India. That loan amount I used to start my business or earn income outside India only. Let's say, for example, in America only, I opened one restaurant. There only I'm earning income. Nothing, no income is getting generated here. No, sir, you are paying interest. No, sir, that is getting generated. Yes. So, if I paid interest for the loan which I took, but I did not use the loan for doing any business in India, then that interest which I paid to that non-resident will not be taxed in the hands of non-resident. If I had taken the loan for the purpose of doing some business or for the purpose of generating some income in India, then only the interest which I paid to this non-resident will be taxable in the hands of a non-resident. Is it clear? Resident person means interest income received by non-resident from a resident person, means from me, except when interest is paid towards loan used for a business income generation outside India. So if I took loan from a non-resident, but I did not use that loan amount to do something to generate income in India, then that interest which I am paying to that non-resident will not be taxed in his hands. It will be taxed only if by taking loan, if I did something here, I generated income out of that loan amount here in India. In that case only, if I pay interest to that non-resident, it will be taxed in his hands. Non-resident towards loan for carrying on business or profession. Now, two scenarios we discussed. In number one, non-resident giving loan to government. Non-resident giving loan to resident. Now the third scenario is non-resident giving loan to a non-resident. Sir, what is this? Yes. If a non-resident is giving a loan to non-resident, let's say for example, there are two non-residents, Chris Gale and Ricky Ponting. Both are non-residents. Let's say for example, Chris Gale gave a loan to Ricky Ponting. Now, what Ricky Ponting will do? He has to pay interest to Chris Gale. No, that income will not be taxed unless Ricky Ponting takes that money, comes to India, and he starts some business. Out of that business, he earns some income in India. In that case, Ricky Ponting, whatever interest he will pay no to the Chris Gale, that interest will be taxed in the hands of Chris Gale in India. So what I told, if a non-resident, Chris Gale is giving loan to Ricky Ponting has to pay interest. No, that interest will be taxed in the hands of Chris Gale. Only if Ricky Ponting took that loan amount and did some business in India, generated some income out of that. Only in that case, the interest income will be taxed in the hands of Chris Gale. If let's say, for example, Ricky Ponting took that amount and generated some income, let's say, for example, he started business, but he started in Australia, not in India. In that case, that interest income, why it will be taxed in India, boss? Not taxed. Next is the royalty income. See, royalty is very simple. Let's say, for example, I have created a formula for cancer, one tablet. I created a formula. That formula, if I have to sell to someone, I have to collect some royalty. Yes or no? Let's say, for example, there is a company, Bharat Biotech. Bharat Biotech has created a formula for or invented a formula for COVID vaccines. Now, what it will do? Let's say, for example, in America, they did not have any formula for creating a vaccine for COVID. So what the USA government will do, it will have to give royalty to Bharat Biotech so that Bharat Biotech can share that formula how to create the vaccine. That is called as royalty. So if I have invented something and someone wants that technique to create that product, I can give the technique. But in return, what I will take is called as royalty, royalty, royalty. Yes or no? So if the royalty is given, the royalty income is received by a non-resident. So if a non-resident has invented something and Indian government wants that formula from that non-resident, then the government will pay what? Royalty to that non-resident. Yes or no? That is covered here. And the resident person, except when it is paid for right property or information used for business generation outside India. So the non-resident created a formula. I am a resident. I am taking what? That I am taking that formula from that non-resident. I am paying what? Royalty to that person. But by taking that formula, if I did some business outside India rather doing in India, then it will not be taxed. If I took that formula and generated some income in India, same in the case of interest income, boss, whatever we discussed, same scenario here also applicable. Are you getting this? So I took that formula to create income in India, then only the royalty will be taxable in the hand of that non-resident. If I took the formula, but I used that formula outside India to generate some income, in that case, whatever royalty I am paying, being a resident to that non-resident, still it will not be taxed in the hands of non-resident. The third scenario also same thing. If a non-resident is paying a non-resident, another non-resident royalty, but it will be taxed only in the case if that non-resident who is paying royalty has taken the formula and did some income generation in India. Now, what is royalty? Here it is given. There is one exception in which the royalty will not be taxed in the hands of non-resident. If the non-resident receives the royalty in lump sum amount from any person who is a resident for selling a computer software and hardware under a government approved scheme, in that case it will not be taxed. It is totally exempted. Now, what is royalty? Here it is given. You can have a look later. What is the next one is what if fee for technical services? Let's say, for example, Indian government wants to build a metro. First time Indian government wants to build a metro. So it went to Japan. Look at the technology. Oh, very good technology. But we don't have that technology. Now what we'll do? Indian government will ask the Japan government, sir, please send your technical experts to India so that they can give us a plan how to construct this metro. That plan we are requesting that technical services, yes or no? So if we are importing some technical services, we have to pay fees for that, no? So that fees is called as fees for technical services, payable by government. So if any Indian government is paying fees for technical services to any non-resident, that fees will be taxable in the hands of non-resident. Same, if a resident person, I am taking some fees for technical services from a non-resident, I have to, the non-resident has to pay tax on that fees received from me. But I am taking the technical services to generate income outside India, then the non-resident will not be required to pay any tax. Same scenario like interest or royalty, whatever we discussed. If a non-resident pays a fees for technical services to another non-resident, but that non-resident should do something or should generate some income in India, only then the fees for technical services will be taxed in the hands of non-resident. And what is the meaning of FTS I have given here. The next thing is gift. Let's say, for example, I have a friend outside India and I am gifting to that non-resident anything. Gift of money, if I am giving, in that case, it will be taxed in the hands of my friend non-resident. From 2023 onwards, they have included one more thing. If a gift received by resident and not ordinary resident, let's say, for example, I have a friend who is a resident, not ordinary resident, and I have gifted him something. That gift, whatever he received, will be taxable in the hands of that person who has received the gift. Now, sir, we have seen who is a resident, who is a not resident, what is the Indian income, what is a foreign income, everything. Now tell us the taxability, sir. So we will merge these two concepts. We know who is a resident, we know what is the Indian income or foreign income. If we merge these two, what we can conclude is, in the hands of resident, what all income should be taxable, Indian income taxable or foreign income taxable or not taxable or. In the hands of resident, not ordinary resident, which income has to be taxed. In the hands of non-resident, which has to be taxed, which has to be not taxed. Let's see. See, if you are a resident, ordinary resident, your global income is taxable, boss. Indian income, foreign income, any kind of income, fully taxable. If you are a non-resident, two extremes, resident, non-resident. Middle one is what? Resident, but not ordinary resident. So if I am a resident, full all foreign income, Indian income, everything taxable. If I'm a non-resident, only Indian income taxable. Only Indian income. Whereas in the case of a resident, ordinary resident, Indian income is taxable. In foreign income also there is one special income which will be taxable. Let's have a look at the table. If I'm a resident, ordinary resident, Indian income taxable, foreign income taxable, other foreign income taxable. Anything is taxable. In the non-resident case, Indian income taxable, foreign income not taxable. But when it comes to resident, not ordinary resident, Indian income taxable. If you look at the foreign income, income from business or profession controlled or set up in India. Let's say, for example, I am a CA. I am generally resident but not ordinary resident. Not ordinary resident. So I have a consultancy firm started in Bombay. I started a consultancy firm. Now, mind you, this consultancy firm does what? It provides services to non-resident. I have non-resident clients, American clients I have. Let's say, for example, there is an American company for which we have to do accounting, their bookkeeping, I have to provide services. And I'll get money also outside only. I have a bank account outside India. In America, I have a bank account. Client is also American. He will deposit directly in my American bank account that money. Income, did I receive the money in India? No. Services provided, that is also outside India. But remotely, my firm is working from Bombay, consultancy firm, where two people are sitting under providing that bookkeeping remotely. That is called as a income from business or profession controlled or set up from India. So I have a consultancy firm set up there. Now income, in that case, it will be taxable. Other foreign incomes will not be taxable. Are you getting it? So in the scenario which I told, consultancy firm providing services to non-resident, that is a foreign income only, no? Because services are provided to whom? Non-resident. Where they have given money? Outside India only. That is totally foreign income. But that is from a setup in India. No, the setup is in India. The firm is in India where the provision of the services are happening. Are you getting this? Next. So income from business or profession controlled or set up for India, set up from India, which I just now discussed. Now taxability of income for other associates. Now, whatever we have discussed is only in the case of whom? Individual and HF. Now, because only in individual and HF only, you will find resident, not ordinary resident. In all other cases, there are only two kinds of residential status: resident or non-resident. So, if you are a Indian income resident, fully taxable. If you're a non-resident, Indian income is taxable. If you're a resident, foreign income is also taxable. If you're a non-resident, foreign income is not taxable. So this ends our discussion on residential status.